Hi guys, welcome back, and today we're going to look at the straight line method, which is also known as a cost method. And we know that whenever you are using the straight line method, we are going to say cost multiplied by the number of months that we had the asset in the business, then divide by 12, then you multiply by the percentage that you were given. But whenever you come across something to talk about the residual value, which means we are not going to calculate in this way, but you're going to say cost minus what the residual value divide by what the useful life. If they were given, let's say maybe the asset will last for 5 years, which means you're going to multiply to divide by the 5 years. What is residual value? Residual value is it is what the asset will worthy when it reaches what its useful life, or we can say it's an estimated value of an asset at the end of its useful life. Let's look at this question paper, which is June 2023. They say the accounting period is ended on the 28th of February 2023, which means it started on the previous month in the previous year, on the next month in the previous year, which is what the 01 of March 2022. So they say let's calculate what the depreciation for they say let's calculate the depreciation for equipment, and they say the depreciation need depreciate at 15% per annum, and they say we had a new equipment that was bought on the 31 of July 2022. Then let's go to our pre-adjustment trial balancing. On our pre-adjustment trial balance, let's look at our equipment. You can see that equipment at the beginning was 774,000, but on at the end is 822,000, which means there's an additional of an equipment. In order to calculate the depreciation for the year, we have to know how much was our old equipment and how much is our new equipment. Then we are going to say 8, which is balance at the end, 822,000. We minus balance at the beginning, which is 774,000. Then it's equals to 48,000, which means now we know the value of our old equipment, and also we know the value of our new equipment. Then let's calculate the depreciation using the cost line method or the straight line method. For the old one, we're going to say old, we're going to say 774,000. This is a value of the equipment before the additional one. We're going to say multiply by 12, divide by 12. Why 12? Because we had this equipment for how much? For more than 12 months, or for 12 months. Because whenever you calculate depreciation each and every year. Then we multiply by the percentage that is given, which is 15 over 100, which is 15%. Then it's equals to. Then let's say let's calculate the depreciation for the new one, which is it costs the value of 48,000. Then you calculate by you multiply by the number of months that we had the equipment in the business. Remember, this equipment was bought when at the end of July, which means July is out. How many months do we have the equipment in the business, which is August 1, 2, 3, 4, 5, 6, 7, which means we're going to multiply by 7, divide by 12, then we multiply by 15 over 100, which is 15%. Then how much is depreciation? How much is depreciation for the old one? Is 116,100. And how much depreciation for the new one, which is 4,200. Then how much is our total depreciation? Our total depreciation is equals to 120. Is it 120? 120, 300, if I'm not mistaken. Thank you.